So the graph I'm going to show you now literally tells you all you need to know about what's happening in the property market and what you need to be doing in the property market right now to build wealth for the long term. Will the property market crash in 2024? That's one of the biggest questions I'm hearing from property investors and property entrepreneurs right now. In this video, I'm going to lift the lid on what I think is going to happen in the property market in 2024, and it's not going to be exactly what you'll be hearing in the media. If you're new to this channel, we put out plenty of content each and every week. Make sure you subscribe, hit the bell icon so you're notified when we upload new stuff. Also, smash that like button. It really helps us out on YouTube. Well, what do I know about property prices and what's going to happen? I'm just another YouTuber. Well, I'm a YouTuber with a rather unique position that I run the UK's largest property investors networking meeting. Every month we have 300 property investors meet up at our monthly events, and they come from all over the UK, and what all that means is that I have my ears very close to the ground of what is actually happening. I'm hearing what investors out there are going through right now and how they're overcoming these challenges nationwide. I think before we get on to the meat of this video, we've got to explore some of the meaning of words. What do we mean by a crash in the market? What do we mean by property price as well? Because you're going to hear a lot of negative headlines, because negative headlines is what gets eyeballs, quite frankly. Now, the definition of a crash, first of all, is when you have a movement of more than 10% downwards in a 52-week period. And what we're going to see more and more in the headlines is talk of a property price crash, meaning prices of property will be going down more than 10% in a 52-week period. So you can see by this graph here, this movement in house prices in the UK has actually already started to happen. I mean, despite all the interest rate rises, house prices just kept on rising through the summer. But in August, we've started to see falls, and we've started to see the fastest falls since 2009. But this is where, as a savvy property entrepreneur, you've got to understand the difference in meaning between price and value. So the graph I'm going to show you now literally tells you all you need to know about what's happening in the property market and what you need to be doing in the property market right now to build wealth for the long term. So let's go back to this inflation-adjusted house price graph. Now, the red line is the long-term trend line. Now, obviously, the market does not move exactly according to that red line. There are times when house prices are going up above the long-term trend line, and there are times when prices are below that long-term trend line. And that's because, I guess, the players in the market are emotional beings, and they're driven by emotion, not just business and all the rest of it. The market is imperfect for many reasons, and that causes the market to move in peaks and troughs or booms and busts. Now, if you look at history, when have property investors done particularly well by getting their timing in the property game just right? People that invested in the early 90s did very, very well. People that invested just after 2009, the credit crunch, did very, very well. These were times when the property prices were below the long-term inflation-adjusted average line. In a nutshell, the way to play property is to be wary and exceptionally careful about what you're doing when property prices are above this long-term line, because those are the boom periods when the market's a little bit frothy and you can be in danger of overpaying. It can be a bit like playing musical chairs and being a little bit concerned about what's going to happen to you when the music stops. But when you are buying property, when the prices are below the long-term average line, what you know is you're getting real value in the real estate that you're picking up compared to where it really should be on the long-term average line. And as true as night follows day, boom follows bust. The period we're looking at now, where property prices are below the long-term average, will end, and it'll be boom time again. Now, the reason why timing is so important in this property game is that if you're lucky enough or savvy enough to time your participation, your entry into the property market when the prices are below the long-term average line, then you only have to wait a few years before prices and your investment gives you a significant rise. Whereas if you bought your properties here, you're pretty much stuffed. You're waiting a long, long time before you're going to see an improvement on the purchase price that you've paid. Now, if you have knowledge, if you have skill, investing in these below the line periods is a lot of fun. Because basically it's a buyer's market. Above the line it's a seller's market, below the line it's a buyer's market. Buyer's market means that there are more sellers than buyers. You have the upper hand as a buyer. That means properties takes longer to sell, there are more motivated sellers out there. The price difference between shabby property and A1 property increases, and there are more bargains to be had. Are you struggling to find your next commercial to residential conversion project? Well, over the next 2 years, virtually every UK bank branch will close. Banks are fabulous buildings in prime locations, and thanks to permitted development rights, they're really easy to convert to alternative uses under a light touch planning regime. My team have put together a list of over 500 UK bank branches which are poised for imminent closure. And for a limited period only, you can download this list absolutely free. Your next commercial property project is on this list, so download it now and enjoy the rest of the video. This period that we're in now, in 2024 and beyond, where prices are below the long-term average line, is likely to last a few years, but it won't last too long. So it's best to be buying the right property in that time period, because these times when property prices are below the long-term average line are the times to fill your boots. Now, if you're liking this content, smash the like button. Also tell me what you think about what I'm saying in the comments below. Join us at this month's Baker Street Property Meet, the largest networking event in the UK, where we talk about all this sort of stuff and share with you views from various expert speakers as well. Now, another thing to bear in mind about this period is inflation. Now, inflation has been sky high. Why? Well, since COVID, we had Eat Out to Help Out and tons of money printing, the furlough scheme and all of that. It was basically inevitable. You print a ton of money, inflation follows whenever you do that. What normally happens is when we have had a high period of inflation, property prices take a little bit of time to catch up, because inflation hits first in the prices of stuff. So commodities, oil, energy, food and all the rest of it. And then later on it hits wages. And then later on it hits property, because sooner or later it has to. So inflation has a strange effect on the people's perception of the value of money. I mean, if you were a millionaire in the 1960s, it meant something completely different to what having £1 million does today. So if you think about it, if a house is 100 grand and you've got inflation running at 10%, 7%, 5% for a few years in a row, what happens after 5 or 6 years is that 100 grand suddenly doesn't seem as much as it did in the previous 5 years. And by that time, wages have gone up and all the rest of it. So a £100,000 property suddenly seems cheap. And that is what usually gets us out of the bust period, where property prices are below the line, and triggers a boom. The thing that's really interesting to look at in the UK is what's happened in the 5 years after a period of high inflation. Now, whenever we have had high inflation in the UK, house prices have literally doubled within 6-7 years of that time. So last year, of course, inflation hit 9%, 10% double figures. The last time we had inflation at 9% was, of course, in 1982. Now look what happened here in 1982. Within 5-6 years, you're seeing a massive increase in house prices. Similar thing happened in the early 1970s, where we saw massive inflation, particularly with oil prices doubling or more than doubling in a very, very short space of time. which caused a massive inflation spike. And we saw between 1970 and 1975 a doubling or more of house prices. So what I'm saying is that investing below the long-term trend line is common sense, quite frankly. You should be picking up properties using your knowledge and skill to make the right investment decisions and buying the right income-producing assets during this period. But inflation gives you, and the fact that we've had double-digit inflation in the last couple of years gives us an extra bonus factor in terms of if you buy the right property now, which is cash flow generating, and basically sit on it within six or 7 years, you will see a massive increase in price. Now let's talk a little bit about mortgage debt as well. Now, of course, the narrative at the moment is that mortgage interest rates are high. They're not really high, they've normalized. Long term in this game, 6% has been pretty much the average. In fact, remember what I said earlier in the video, 5.75 was the rate in 2007, and house prices today are still higher than that level when adjusted for inflation. But the thing with debt is if you use mortgage debt and you can fix the rate today for 5 years, and you can buy an asset which produces you positive cash flow each and every month, then you are making money on that debt. And then of course, inflation, a little bit of inflation, is actually a property investor's good friend, provided of course you have the right amount of debt. And that's because if I borrow £100,000 today, in 5 years' time, the value of that £100,000, although is going to feel different, because the amount of debt doesn't change. It's still £100,000, but in 5 years' time, in 10 years' time, the value of that debt will feel lower than it is now. So a little bit of inflation is actually good news for property investors. But of course, it's very important to get your debt levels just right. It's a bit like Goldilocks and her porridge, not too hot, not too cold. Too much debt and it's just too hot for you. You are likely to be very, very exposed to any changes in market conditions, and you can quickly come a cropper. Too little debt and you're really not making your assets and money work hard enough. What's the right level of debt going forward? I would say about 65% loan to value. I mean, these are just some of my views. Tell me what you guys think in the comments below. So let's just sum it up really. You're going to see a lot of headlines in the media and everywhere about price crash, housing market crash and this and that. Yes, because it's clickbait and it gets you to open it and read it and all of that. But it's not really about price, it's about value, it's about inflation adjusted value of property. And property for most people is their biggest investment. It's the biggest thing they'll ever buy. And if everyone's talking it down, they tread with extreme caution. That creates a buyer's market, which means there's more opportunity for savvy property entrepreneurs who educate themselves as to how to do this game properly. This is the time to buy cash flow generating assets and hold for the medium term. On this channel, we've got plenty more videos to release to explain just how you guys can do that. So make sure you subscribe, hit the bell icon, and catch you guys in the next video. The Baker Street Property Meet is the UK's largest and #1 property investors networking event. The property market is going through monumental change right now, and at Baker Street Property Meet, we aim to keep you up to date with the latest tips and tricks and insider tactics to help you keep on top of your property investing game and succeed in these troubled economic times. The Baker Street Property Meet is fundamentally about networking, because it's not what you know, it's who you know. And at Baker Street, we aim to connect you with the people to make your property journey a monumental success. There's no better place to be to further your property investment journey than the Baker Street Property Meet. So make sure you're here, you're connecting with myself and Andrew Roberts, our expert guest speakers, and 300 passionate property people each and every month. See you at the next meet. Get your spot at bakerstreetpropertymeet.com.